Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts.
So let's look at our MACD, which simply stands for moving average, convergence, and divergence. And it's just a hybrid of your moving averages that you generally see applied to your price chart, although it gives us a little bit of an early indication as to when a preceding trend might be coming under some pressure. And it kind of just identifies again when your price action is not quite supporting the direction that their trend is in place. So it's sort of counterintuitive in the sense that we're looking at a trend in place, but we're looking for that early warning signal over and above what we're seeing in the price action to help decide that maybe it might be time to take some an alternative position or take some action to lock in some profits. We can look at also convergence and divergence between the oscillator and our price to warn of a possible change. And really what this particular indicator does is it uses two moving averages, which is our 12 and our 26. I'm going to illustrate this in a second. And it then adds a third day, in this case day because we're looking at a daily chart, but a third bar average as a signal line. And so if we go back to our CDD, our U.S. versus the Canadian dollar, you can see very clearly that right in here when our price action started to establish a little bit of a support level, our MACD started to cross over, and our red line here indicates that longer-term sort of trend that was sort of suggesting that we had a downtrend in place. And as our short-term signal line, or our 9-bar moving average, began to cross, what it suggested is that the preceding downtrend was now starting to lose momentum, lose strength. The price action wasn't supporting, and we've got a signal suggesting that the likelihood of a change in direction should be considered. And of course, you've got a MACD crossover, and then you have a trend that essentially started one of the largest rallies as of in a long time on the U.S. dollar, strengthening in this case against the Canadian dollar. Of course, to show you how you can use this as a means of establishing the probability of a change in direction, we have a break. We have that play into that key pivot, that inability to make that higher high, and we couple that with a crossover of our MACD, and what that's telling us as a trader is that, you know what, that nice long trend that we've been part of since 105 or since 107 is now coming under some jeopardy. I know right now I've made some good money. I know the probability that this trend is going to go against me is high, so let's get out and step back and watch how things play out. And then, of course, you had that move to the downside. Now, if we look at more recently what's happened, you can see here again we had that play into that key resistance level, that inability to make a higher high. We had our MACD crossover, and that initiated a continuation to the downtrend. So present day, which is really what we're all interested in because this is where we conceivably make money, what we're looking at here is although our MACD hasn't crossed over, we can see if we go back to our to where our trends changed, we can see that our histogram or our MACD was actually, as we were making higher highs, you can see we're trading into some highs, but the MACD momentum here is just not supporting that. And again, that's suggesting the probability or the possibility of a move to a lower low. And our histogram, which is really just measuring the width between these two lines here, is also suggesting that, yeah, we may be playing into some similar highs, but the market just is not supporting that price action. So that's a little bit of an early warning sign suggesting that, hey, this may not be a good entry point to buy puts to capitalize on the downside, but you certainly need to be cautious of taking any positions to the upside. In saying that and bringing it to what we see happening right now, what we see here are a couple of our lows being made. So you see a move down into a low here roughly around the 117, 118, a little bit of a rally, and a drop below down into roughly the 116, and our histogram suggesting that the momentum is not quite there. And although our MACD hasn't crossed over, although today we would be seeing that, we can suggest that a key entry level would be on a break above this 120. And we've had that today. So guys, again, not recommending any sort of trade, but if we're looking at the probability of a test into some higher highs, by putting these little pieces of the puzzle together before the market action is really even bringing us in, we could step back and now wait for a key entry using our price action. So we've got a couple of things in our price chart that play into a little bit of a support level, the convergence taking place on a histogram, and finally a break above a key pivot, suggesting that this is a high probable trade. Guys, recognizing that if we break below this level here, okay, high probability we're going to go down and start testing some of these lower support levels. Okay, Steve, again, any questions as we move forward here, or shall I just keep going?
Keep on going, Jason. Yeah, I think you're doing a great job.
All right, good stuff. So in saying that, again, we want to add a little bit more to the puzzle here. So I've got the RSI, the Relative Strength Index, here as an additional indicator. And just a little background, developed by J. Wells Wilder. So a lot of times you'll see RSI Wilder on your price charts as a choice as to which indicator you want to use. So RSI Wilder is an appropriate one to select. And what we're looking at is essentially the stock gains and losses over a specific time, calculating an average, and then we see a number reflected between 0 and 100. And of course, when the average gain is higher, our RSI rises, and when it's when the average loss is greater, our RSI falls. To keep it real simple, we add a 50% line. And what that does is it helps establish a bit of a directional or a bit of a market bias. So although we're seeing all these crazy sort of peaks and valleys and different things happening in our price chart, we can use this center line crossover as a means of establishing a key sort of line in the sand with respect to our directional bias. So, for example, if we have a break above that 50% line, we can be a little more confident that over the bigger picture we're going to see momentum build towards the upside. And conversely, if we see a break below that 50%, then we can be a little more comfortable that we're going to see momentum continue to build to the downside. What I want to do, and I just realize it's kind of a lot of information here on to kind of digest, but we have our YUK, the U.S. versus the Japanese yen daily chart on the left-hand side, and we've got our CDD, the U.S. versus the Canadian dollar on the right-hand side. And the U.S. has been losing strength against the Japanese yen over the last little while, and so you can see here that clearly we have a downtrend that has been in place. So what this means is, because again the U.S. dollar is our base currency here, what this means is that the U.S. dollar has been dropping in value against the yen. And if we're looking to take advantage, folks, what we would be doing is we would be looking to buy puts on the YUK, anticipating that the YUK is going to go down. But what I want to draw your attention to is there's a couple of things. First of all, you guys can see that as we initiated this next leg down in the YUK, we saw that break below the 50% line, and that's telling us that now momentum is really sort of building to the downside. And you can see that there's several times where we tried to push above that, and that's actually, we can identify here in that price consolidation, but we needed to be cautious there because our indicators were suggesting a more bearish sentiment in the overall markets. And so consequently, what we had here at that same time to tie these other indicators together is a MACD crossover. So
thank you for listening to our podcast.